So I want to go through the most common types of journal entries that you'll encounter when dealing with accounts receivable. So the first one is when you make a sale to your customer. So I'm just going to call this one to record sales on account. So we'll end up debiting accounts receivable. And then we'll credit our sales. So that's when we sell something to a customer and we don't make them pay us the cash right away. We're just extending them credit. So then the second journal entry would be to collect the cash from the customer. So I'll call this one to record collection of cash from customer. So we'll debit cash, so that will increase that, and then we'll credit our accounts receivable. So then we'll end up decreasing our accounts receivable when they pay us off what they owe us. Okay, but here's where the problem is. Not everybody you lend money to, so not every customer that you extend credit to is actually going to pay you back. There are going to be some customers that will just not end up paying you and you already gave them your product. So in order to deal with that, we're going to have to write them out of our accounts receivable. So I'll call this one to write off an account from a customer who did not pay. So I'm going to create a contra asset account, and this is called Allowance for uncollectible accounts. And I'll do a different video to show you what this account is about, but for now we're just going to memorize the title. And then we're going to credit our accounts receivable. So essentially I'm just moving it out of my accounts receivable and then just putting it into this holding account for now. Now, sometimes when we actually write off that customer, some customers actually then somehow end up paying us. So we're not going to say, no, we can't take your cash because we wrote you out of our system. What we have to do is reinstate the customer again, and then you can accept their cash. So this fourth journal entry would be to reinstate a previously written off client. So this is the journal entry we did here to write them off. So all you're going to do is reverse that journal entry. So we're going to debit the accounts receivable. And then you're going to credit the allowance for uncollectible account. And then what you could do is collect the cash. So then you would go up to this journal entry here and then record the collection of the cash from that customer. So we do this dance throughout the accounting cycle, but then at the end of the accounting period, so this is an adjusting journal entry, what we need to do is set up a bad debt expense. And there's a couple ways that we could do this. So our standards say we can use the balance sheet approach, and then we can just age the receivables and then set up the bad debt doing that. Or we can use the income statement approach, where we just take a percentage of our credit sales. So in the next video, I'll show you how to do the balance sheet approach. So then I'm going to debit bad debt expense. So you have to remember, you have all of the sales on your income statement, but you don't have any expenses against those sales for the portion that we think we may not collect in the future. So we're going to call that debit to bad debt expense, and then credit my allowance for uncollectible accounts. And you just have to be careful, because sometimes once we open up the T account for the allowance for uncollectible accounts, we may have to do the reverse of this entry, where we debit the allowance for uncollectible accounts and then debit bad debt expense. So those are the 5 most common journal entries that we'll make when we're recording accounts receivable.